Hello, this is Dale, and welcome to my stock and option trading education series, Lessons from a Professional. I trade for a living, but I've got a passion for teaching you how to be a success. Now tonight I'm going to go over a very profitable trade I just recently got out of, and that was a trade on KO, Coca-Cola. To show you this trade, I'm going to bring over my Thinkorswim platform. I'm not affiliated with Thinkorswim, but I think it's one of the finest platforms out there as far as charting is concerned, and also the commissions that they charge are very, very good. You're doing all your own work here, you're putting in all your own trades, but Thinkorswim is one of the best. Okay, on Coca-Cola, I've got there's two screens that I'm looking at here, and I'm going to go over a little bit more of these indicators in a later lesson. But first of all, I want to show you that these are the regression channels. Okay, and this purple line is what they call the regression line. It is developed by taking 50% of the price above and 50% of the price below. So the regression line as calculated is an absolutely wonderful trend line. Now, you can go in and you can put in +1 and -1 standard deviation from that regression channel. Statistically, that means that 64% of all price will be contained within the plus and -1 standard deviation. Then the plus and -2 standard deviation, statistically 95% of all prices will be contained within that channel. Now you do get an occasional outlier, but I have found the regression channels to be one of the most powerful indicators in my arsenal. It gives me an idea of when a stock is overbought and oversold. You can see on Coca-Cola that Coca-Cola dropped from 43 May of this year all the way down to 36 in October. And a lot of people probably were selling. But the regression channel was telling us the selling is about over. Coca-Cola selling, it's oversold. It's oversold. Therefore, at that point in time, I started to look for a call opportunity. I got a call right around this area here, right around the 37.6. And also in a later lesson, I'm going to teach you exactly how I choose which calls to get into. Now, to exit a trade, I use the Fibonacci's. And you'll notice that this Fibonacci of 161.8 is an extreme overbought Fibonacci. So we have taken a huge run here, and it's time to jump out of Coca-Cola. We jumped out of this trade with about a 75% profit, and that was in, well, we got in sometime around early October, got in sometime in late November, almost 2 months for that kind of profit. I've developed 4 very profitable trading strategies which I use in not only my personal accounts but the hedge fund. I'd love to teach you these strategies. Tonight I've shown you one, just the highlights, but I'd like to teach all of these strategies to you and work with you as a mentor. So I'm asking you to sign up today on www.breathhouroptionmentoring.com. The cost is very low compared to my competition, and I will be the one that teaches you and leads you on your way to success. Tomorrow, or not, the next lesson, might not be tomorrow night, but the next lesson, what I'm going to do is I'm going to spend some time talking to you about the Fibonacci's and the power of the Fibonacci's and how they are derived. I hope you join me then. Bye-bye now.